Hello, Maverick Currency traders. This is Rob Reinhold. It is tax day, April 15th. Let's jump into it. In this session, we're going to go through the news of the day. We're going to break down what happened. And for the first time in a long time, I can say that Forex was the best trading market of the day. Usually it's been like everything else has been great, Forex hasn't. Forex was great today.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Before we take a look at the markets, let's talk about our summit coming up. Look, I know a lot of you are coming, and I know a lot of you are not coming. Don't worry, we're going to be going over AI, everything about AI, how to use AI as a trader, how to get better, how to test everything, how to use it for automation. If you can't be there, for Maverick traders, we will be releasing some videos and some classes after this. So let's talk about what happened today. The markets were really mellow. The stock market was a very narrow range. The bond market was a very narrow range. Everything was a very narrow range, except for Forex was actually decent. It was a decent day. We got UK claimant count change employment, much better than expected. Pound was up about 0.5% today. Canadian CPI missed all the estimates. It was down 0.5% today. We got a nice bit of movement here, and I'm a little bit surprised because typically on a day like this, you don't get movement. Now, granted, we did not get movement on dollar and yen. As you can see, your dollar and yen matched the rest of the market, which makes a lot of sense because this has really been the pairing that when there's risk off, dollar's falling apart, yen is spiking. So we're not seeing any of that in the stock market. So everything else was free to just kind of do its thing. And I pointed out the things that had some news on it. Pound, Aussie, Kiwi, they all did good. So risk on stuff did well. And the things that have been risk off lately, which has been the euro and the Swiss franc, they got hit. I looked for news for Swiss franc. There was no other news other than it's the strongest it's been in 15 years. So this is likely just a sell-off from extreme levels. These are good movements. I mean, you can see there were 1% to be picked up in today's movements if you weren't trading dollar or yen. So I think we're going to continue to see that for the rest of the week because I think the markets are sideways for the rest of the week. And so we have a holiday shortened week in the stock market because of Good Friday. Stock markets are closed on Friday. I see dollar yen being out of the picture this week. And really where the action is going to be is right where we saw the action today. Other markets were really just dead. S&P down 0.1%, VT up 1%, crypto down 0.4%. That's like nothing. Oil flat. Gold was up, but not all that much. And then if you take a look at cryptos, these are very, very mild moves. So the big question is, are we going to get another big wave like we've had over the last couple of weeks where everything is moving? And let's take a look at the chart. We got this again, these waves, these big moves down and then rallies and then moves down and then rallies, big falls, big candles. And you can see that we have just the last 2 days, very, very tight candles. We are right up against some resistance here at 5,500 on the S&P. We just had a really big rebound from 4,800. And that's like a 12%, a little bit more rebound. And now we're just getting tired. The market is like the ocean. Big waves come and then it recedes and it gets mellow. And then some more little waves come, recedes and gets mellow. Then big waves come. We've just receded. We just had a big wave. It's tired. And like I said, where we are in the calendar, we have a 3-day holiday weekend coming up. We don't really have any news out there. We have Netflix earnings on Thursday after the bell that might do something. I see this week in the stock market and the bond market being boring, which means I see the dollar and the yen cross being boring as well. With that being said, I actually think Forex is the place to be if you're going to be a trader looking for movement. Tonight, we do have some Chinese data, which should be interesting. So if you're trading Aussie Kiwi, this is going to absolutely affect you. We've got GDP, industrial production, and retail sales coming out of China at 10 o'clock Eastern time. In the morning, we do have US retail sales. But this is the one I think is going to be the most exciting, Bank of Canada. The CAD is looking extremely weak. Whenever you are getting a lot of movement into a central bank announcement, it's because people are taking positions. They're taking positions, they're selling CAD right now. So if the Bank of Canada comes out and says something that people didn't think they were going to say, there's going to be a violent snapback to that. So I actually like going into the Bank of CAD, looking at it as, okay, did it get a little too far pushed down? Could there be some bounce back on it? We'll have to wait and see. I'm not taking any positions before that. But this is something, again, I'm looking at. And then take a look at a Wednesday night. We've got news on Kiwi and Aussie. So look, I think where you want to be hunting is exactly where we saw the movement today. Pound, we've got CPI on pound. We've got news on CAD. Aussie and Kiwi were moving today. We got news on them in the next 24, 48 hours. I think this is where you want to be hunting. I don't think dollar and yen and even euro and Swiss franc don't look all that interesting to me. I think it's going to be in those other four currencies. I'm going to go through these fairly quickly here. So here's yen. Let's go to a 4-hour chart. And you can see yen's not moving. So I'm not interested. Is dollar moving? You know, dollar has had a huge move down over like 2 weeks. Now it's just bottoming out. It has not moved in the past 48 hours. Not interested. We know Swiss franc is moving, but look where it's moving from. Just extreme highs. These aren't great short opportunities. Euro, again, it's moving down, but not with any velocity. We come over here to the pound and we see, oh, the pound is actually starting after this big fall here through all of the 1st of March. We're starting to get some buying here. This is a nice upward trend here. Everything's looking good on pound. We can definitely look at pound as long. We've got CAD that's intensifying. This is where the velocity is here on CAD. CAD's at a -3 at the moment. Take a look at Aussie. Aussie looks like a mild riser, and then the Kiwi looks a lot steeper. So when we take a look at the currency board here, it's telling me Kiwi and pound is where the buying is. Right now, the selling's in the CAD. Again, if I don't want to be short CAD because of that Bank of Canada, you probably got to go up here to Swiss franc and the euro. That's all that's weak at the moment because dollar and yen are really just sitting there doing nothing. And as far as crypto goes, they've run right up into major resistance here. So they're no longer bearish, but you really can't call them bullish in any way, shape, or form. They've just run into overhead resistance and hanging out there. So here's the velocity scoreboard. And like I said, it's pound and Kiwi, in my opinion, is the best. CAD right now is the best short. Running into Bank of Canada. I'm not looking at it, so I'm going to have to default to euro and Swiss franc. So let's go ahead and look at some of those pairings and see if there could be a decent trade on the horizon. This is one of my favorite little tricks. Okay, we've got two currencies that we want to go long, two we want to go short. But which one is the best? Well, let's pair them both up. So let's pair up pound versus the Kiwi. Pound versus Kiwi. Which one is stronger at the moment? Pound has been falling. Now over the past 8 hours, the pound has risen a bit, but overall, the Kiwi has been the stronger currency. So I'm looking at Kiwi number 1, pound number 2 on the strong side, and then it's okay, what has been stronger? Euro or Swiss franc? And you can see it's about even here. But over the last little bit, euro has been slightly stronger than Swiss franc. So that means that my favorite pairing here is Kiwi Swiss franc. So here we are. Let's take a look at it on a daily chart, and you're going to see it doesn't look great on a daily chart. Now, me personally, I don't love these kind of trades. Why? Because it is on a daily chart, we're right in the face of a downtrend. So you do get bounces in downtrends, but they tend to be short-term in nature, and they end up being a few days at best. I don't like running into the highway to grab a couple nickels because, again, the downtrend is down. So for me, this daily chart, I just don't love it. Let's see if I can take a look at that pound against the Swiss franc, and let's see if it's any different. And you can see on the daily chart, it's no different. I don't take counter trend trades often. The only time I take them is when I think there's asymmetric risk, meaning I can get way more than like 3-to-1 risk reward ratio because I think there's a big, huge reversal coming. I don't think there's a big, huge reversal coming where I think this trend is suddenly going to change from a downtrend to an uptrend. There's nothing in the markets telling me that. So for me, I don't really love these style of trades. And you're going to see that we really are going to be handcuffed here because even like Euro Kiwi. Here's the daily chart. This one isn't as nasty, but it's still, it's still just a pullback on a daily chart. We don't really have any long-term negatives on the daily chart. It's a pullback. These are going to keep pulling back until they find support and likely bounce higher. So look, I don't love these setups. I don't love any of these setups here. But if there is one to go for again, it is the relative strength and weakness of right here, right now. Then it is going to be that Kiwi Swiss franc. And if you take a look at this on a 4-hour chart, you can see we're starting to push up against this resistance here. That was at 48.50. We're starting to push our way above it. You can see we've got a pretty good little runway all the way up here to about 50. So that's going to be about a 1% move. And I think if someone is looking at this saying, hey, I want to start building a position long in Kiwi Swiss franc at 48.50 because I think it's going to be making a move up to 50, hey, that's 150 pips. That is like 3% move. Look, I don't think the market has the energy right now for that, but we always know news can hit, things can change. This is a decent entry point. The only thing I don't like about it is that on the daily chart, it's telling me, oh, we're right in the area where we usually have failed in the past. Not a 100% great trade, but if you are going to take a trade based on relative strength and weakness, that's the one at the moment. To wrap this up, there's some decent short-term trades out there, but they're all counter-trend trades on the daily chart. If you understand that and you allow yourself to make those kind of trades, I actually think they're decent trades. I actually really do. I think this market, the overall general market, stays a little stronger than weaker, which means that those bond yields probably come down a little bit, which helps the risk-on trade a little bit more. And these risk-on trades of Kiwi and pound versus the euro and the Swiss franc, they're in the right place. They're in the right place. I just want to make sure everyone understands it's probably only good for maybe a 0.5% movement, 1% movement, and it's probably going to take a day or two for you to get that. Which, again, if that's your game, then that's your game. If you like a little bit more exciting game or a little bit more disciplined with the daily trend, then it looks like you're probably on hold for the rest of the week until we get back to next week. Thanks, everybody. Bye.